impact of an increase in corporate rates to from the current 30 to 35%, the first impact would be that the return on equity for shareholders will sort of decrease significantly, yeah? Because the amounts available for distribution would be impacted by the increase in taxes. So what this could mean to the ultimate consumer is that maybe in search of higher distributions or higher dividends, the businesses might want to increase the bottom line, yeah. And the way you would achieve this really is through increased pricing of products or of goods and services, or through cost efficiencies. Yeah, so you reduce your costs so that your bottom line still becomes reasonably good, or a mix of both. What you have in VAT, and VAT is a consumption tax, meaning that the person who bears the burden is the ultimate consumer, is that you have three categories of status of VAT. You have standard rated, which means you are charged VAT at 16%. You have zero rated, which means you are charged VAT but at 0%. And you have exempt. Exempt means you're not charged VAT.
I think if the government would like an extension, yeah, I think they would have to show their fiscal requirements going forward. So it's not only your 2018-19, but your medium-term plan. And I think the Kenyan government is now looking to reduce the deficit to about 3% of GDP over the medium term. So I think there's a lot of positives that come out from the budget, besides the higher recurrent expenditure. We have seen the development budget, and at the moment it's around 6.5% actually to GDP, and which is relatively low. But I think there is a promise now that the election period is over and we've gone through a long election cycle. So I think there is a lot of positive thought from outside investors. So it's not only the public investment that's going to drive the development spending in Kenya. I think since the election period is over and there's some political calm, you'd get a lot of investments from outside. Lots of corporates looking to enter Kenya, and a lot of investment coming into some of the infrastructure plans that Kenya has.
If the interest rates cap is reviewed, then it will be possible for banks to price the respective credit risk to the different customers, and most of the customers therefore should be able to access credit. There will be, of course, customers whose interest rate will be higher than others, and this is because of the risk profile of the said customers. So I think it's on that basis that I think there will be slightly higher interest rates for certain segments, while there will be segments that will continue borrowing at much lower rates. But having said that, of course, as the government therefore then competes for this liquidity, at the moment all the surplus balances that the banks are holding, they are channeling this to government paper. And that's why interest rates on the government paper have been coming down. But once it's opened up and everybody is able to access credit, the government will also have to compete for this credit. And therefore, that increase in demand for the available liquidity in the market will then adjust interest rates upwards.